Hello, everybody, and welcome to another one of IRONSHIELD Financial Planning's Fly on the Wall webinars. My name is Scott Plaskett, and I'm a certified financial planner and the senior financial planner and CEO of the fee-based financial planning firm, IRONSHIELD Financial Planning. If this is your first time tuning into a Fly on the Wall recording, let me quickly explain to you what this is. You're going to experience what it's like to be a fly on the wall during one of my update calls with a member of our Top Guns network. This network is my personal network of specialists. Every so often, I ask a member of my network to touch base with me to bring me up to speed on the latest happenings in their area. And when they call me, I record the call so you can be a fly on the wall for that call. In today's episode, I have an update call with Charles Wilton, a portfolio manager at Raymond James Limited, a Canadian subsidiary of Raymond James Financial. Raymond James is one of the most respected investment management firms in North America. I love speaking directly to portfolio managers about their process. Process is so important to investing, and when I can get a portfolio manager to explain their process in plain English, we all benefit from this wisdom. Now, here's the call. Charles, listen, thanks so much for taking the time today just to go through, again, another acquisition and disposition, or should I say disposition and acquisition that took place in your portfolio. I thought it would be a good time for us to just have a bit of a chat about what it is that you recently sold in the portfolio, and then, you took that cash that was realized in the portfolio and you've acquired something new. We could have a bit of a chat about that. So maybe I'll just pass it over to you and you can explain exactly what's taken place.
No, okay, Scott. Well, we purchased KB Home, I think that was around 2008. With the collapse in the financial market in the U.S., of course, the housing market and the banking market, everything went into the crap can. So the housing market, people thought that the housing market would never come back. It was such a devastating fact. So, of course, that created a lot of value considering the market. People said that the housing market is dead. So we went in and bought KB Home, and we bought it at a very attractive price. And then, as we've seen over the last couple of years, the market come back a little bit in the home builders. KB Home has not come up to the standard of what we like, and the earnings have been deteriorating.
Okay, so the company did actually come out of the crash quite well. It appreciated out of there, but you're saying now that it's not keeping up with what you would need to see it do in order to maintain its position in the portfolio.
That's exactly right, and we have something that's far more attractive that we replaced it with. So we just sold KB Home and rebalanced it with Eaton Corp.
Okay, great. Well, let's take a look then at Eaton and find out what this new company is all about.
Yeah, well, Eaton Corp is it has an enterprise value about $35 billion. It's registered in Ireland, and it's been around since 1916. So it's a massive global company, and they operate as a power management company worldwide. They do electrical products. They're in the car business. They're in the hazard duty electrical equipment. They're in power generating. They have controls. They have thermoplastic hoses and couplings and everything that you could imagine to do with power generation. They're also in the aerospace business, hydraulic power generating systems, the car business, the truck business. So they're a very massive conglomerate that has built up a moat around it for a very long time. So, of course, we're always looking at we're always trying to take advantage of businesses that the market says there's a problem with. So when we look at Eaton Corp, and we bought it around $56, when you look at the valuation of Eaton, the company's trading basically at economic book value. And of course, when we always discuss the accounting versus the actual economics of the business, we like the economics of the business. So it's basically trading an economic book value, meaning that the market is saying nothing's going to really happen with this company. Now, over the last 10 years, it's grown at about 14% on an annual basis. When we do the numbers, even if the company grew at 7%, the valuation would go to $70 dramatically.
And you're saying that it's been growing at 14%.
It's been growing at 14%. but what's going on, and this is why we always look at what the market says it's going to do rather than what we say it's going to do. So the market is saying that Eaton and a lot of industrial businesses, Joy Manufacturing, all kinds of big U.S. conglomerates are not going to grow again. The world economy's over. We'll never see growth again. China's finished, and they sell it off. So when we look at what the value is, now the other thing is that Eaton Corp has only in the last many years has sold at its economic book value. Once was in 2008 when we had the crash, and once now. So what we're saying is this company is mispriced. We're saying that this company will survive and will grow and be prosperous again, the same as John Deere and Caterpillar and others. But the market doesn't think so, which is why we always pay attention to what is mispriced.
Right. So
the company would only have to grow a little bit, and it would go up 50%.
Right. Okay, that makes sense. So you're saying that it's such a great company. It's got a really good solid moat around it, where it's hard for anybody else to get into this business because of the I guess the conglomerate nature of the business, that it does so many things. That the company, if it just continued at half its growth rate, should be worth a lot more than it is now. And there's really no reason why the company wouldn't continue at the growth rate it has been growing at.
Exactly. Now, when you look behind it a little bit, you're seeing massive insider purchases.
Oh, okay, yeah.
You're also seeing what I call gurus. These are the people that I follow. That whether it be Buffett and Munger and Dalio and Ron Barron, the people that understand valuations and are more of a long-term investors. When they see value, they recognize value to some degree that we do as well. So you start seeing a lot of these people piling into our stocks. Mm. So when you look at the distribution or who's accumulating these stocks, whether it's Caterpillar, Deere, IBM, you're looking at the top managers, money managers on the planet, especially in the U.S., all building positions. So if Warren Buffett starts buying, like he's been buying IBM and he buys Eaton Corp, what he and Dalio and a lot of these people want, and me to a certain degree, is that you like for these companies to stay down here because you can accumulate more.
Right.
So we got insider buying, we've got sophisticated buying, we've got a great business, huge moat, generates a lot of cash and a lot of revenue globally. That's why we buy it.
Yeah, all in all makes for a great acquisition. Well, that's super. Well, thanks for sort of going through that with us. And it's always nice to get sort of some background information as to what motivated you to actually pull the trigger and acquire a new company. Because I know it's very difficult for you to actually pull the trigger because very few companies actually meet the criteria that you require to be made part of the portfolio. So when you buy,
we did the same thing. Yeah, we did the same thing with Nike. When I bought Nike, what was the market saying at $30? Nike was finished. Under Armour, other people are going to come up, take over the business. They had a good growth rate. They had a good solid moat around them based on the quality of the merchandise that they make, the quality of the products that they make. And at $30. So what was the market saying at $30? The market was saying, well, it's over. Right. So we bought it at $30, and then it went to $75. And then we sold it because the expectations were getting very high at $75, and now it's above $75, but now it's on the other end of the scale.
Right.
That Nike, unless something weird happens, that their growth rate is going to accelerate over the years, it's tremendously overvalued. So now you can see the whole perspective.
Right.
See, at Nike, who thought Nike at 30 was a dead business? Some people did, which is why it traded at 30. This is why this mispriced thing is important. So at 30, now who says at 100, if Nike goes to 150, who says it's going to go to 300? Well, it can't. Because it can't grow that fast. It's just the expectations.
Right. they're out of whack.
So we did the same thing with all the companies. Now Eaton's another thing. So people are going to look at Eaton at $56, and then say 2 years down the road it's trading at 75, or 3 years it's trading at 100 or something. And they say, well, why didn't you buy it at 56? But we're not in the trading business. We're out there to buy this as if it's our own business, and we've had only 2 opportunities to buy it here in 30 years.
Right. Well,
at the economic book value. So that sounds okay to me.
Yeah, no, well, that's great. Well, I'm glad it was on your wish list, and I'm glad it came to you, and you took the opportunity. So I look forward to seeing how it unfolds. Well, listen, thanks, Charles, for going through that. I really appreciate it. And as always look forward to our next conversation when we go through whatever next transaction takes place.
Okay, thanks, Scott.
All right, thanks. Thank you for listening to today's call. If you require further information or have a question relating to today's call, please go to the comments section in the show notes below. Ask your question or make your comment and we'll respond directly online. If you would like to take advantage of a free, no-obligation appointment, please call me at 416-626-6515. Or you can visit us on YouTube by checking out our YouTube channel, youtube.com/IronShieldCFP. Follow me on Twitter, twitter.com/IronShieldCFP. Like us on Facebook, facebook.com/IronShieldCFP. Or you can connect with me on LinkedIn.